5 reasons why you should never trade crypto and how to overcome them. This is a very common thing. You get all excited about wanting to trade, but it doesn't work out the way you want. And I'm gonna list these out one by one. Number one, you will get greedy, right? You'll get into a position that'll make money, but it's not enough for you. You don't have a really good understanding of how you're supposed to profit take, you know, a topping tail. You don't know what a good return really is, that taking profit or breaking even doesn't hurt you really. You will get greedy, you'll stay in it too long, you won't get out, you won't take your chips and go. You think it's gonna 10x from the time that you came into it, you know, and then it just doesn't work out. And it's your fault because you didn't study enough. You didn't understand what you were doing. Reason number 2, you can't cut a loss. This is a typical one. When you trade cryptos and stocks and anything, specifically with crypto, that is even more important with crypto, is you're gonna be wrong. You know, you're gonna enter a position, it's gonna go lower than you want, lower than a resistance support line. There'll be really bad news, the market will dip and change, and you can't get out of it, right? You won't cut a loss because your ego is engaged. You're right on your analysis and the market is wrong, but it's the other way around. The market is right and you're wrong. The market is God and you're just living in his world. So you can't cut a loss, you can't stop the bleeding, you don't want to admit you're wrong, and it's going to cost you a lot of money. You know, you can't just move on to the next one fast enough to keep your money, fast enough to, you know, fight another day. And mostly this is an ego-driven problem, and it's an emotional-driven problem because it hurts to be wrong. It hurts to lose money, having had made money or very little money you did make, but then you didn't call a loss, and then you're out thousands of dollars. It's just so typical. This happens to everyone. You have to understand that it's a numbers game. It's gonna happen. It's part of it, and there's no avoiding it. If you can win 7 out of 10, 8 out of 10, then you'll win as long as you cut your loss, as long as your downside is minimized. And cutting a loss does that. Reason number 3, you will stop trading. This is part of reason number 2. If you lose money, you'll stop trading. Or if you don't have the time, you'll stop trading. Or if you don't have the dedication, you'll stop trading. There's a lot of reasons why people stop trading, in the sense that they're not the same trader when they started, so they stop their progress. They don't understand that this is forever, you know, part of what you do. This is who you are now, and if you stop, you won't get to the other side. I can't tell you how many things I've done that really towards the tail end of them, middle to end of them, I nailed them at the end. This is when I was in college. I got so many better grades my junior and senior year of college because I really wanted to graduate, but I have figured out what to do from all the previous years, and it didn't happen in the beginning. Some people, maybe you can enter positions, you got really lucky. I'm so happy for you. But if that doesn't happen for you, which is the rule, the exception is making lots of money without trying, but if the rule is if you're in it long term, then it doesn't happen. And you stop, and you can never stop, because what you have to learn is a lot, and it's worth doing. It's worth putting in that effort. So if you stop trading, you'll lose, or you can't get over a loss and you'll stop, or you don't have time and you'll stop. Whatever the reason, you stop trading. That's one of the 5 reasons never trade crypto, because you stop. You can't stop. Reason number 4, you will get caught in a rug pull. This happens to pretty much everyone who trades crypto at one point or another. My own personal story with this is that I was in Celsius with some of my Bitcoin, and I remember not putting all my Bitcoin in there because it's too risky to put all your Bitcoin in there, and I was right about that. I'll probably never see my return on that. I can't remember what it was making, like 15-20% after like so many months. It doesn't matter because the company went under. I actually met a Celsius rep who is a very nice young lady, but you know, the company just didn't work out. The people at the top didn't have the collateral to pay with this wild crypto whiplash, and then they were out, and they took a lot of people out with them. Same thing with Sam Bankman-Fried, you know, and his trading platform. He just did bad things. He didn't have collateral. It always comes down to them doing things that don't allow them to cover when people want to withdraw, right? And you got caught up in that. You thought it would be easy money to be in Celsius and earn 15-20% without doing anything. I'll put it to you like this. This is what I figured out afterwards so it doesn't happen to you. And what happens is that you have, what's your risk return? If you make 15 or 20%, but you're risking 100%, right? By giving your cryptos away, you risk 100% when you do that. Then it isn't worth doing, right? You get 15%, but you're risking 100%. That is a very bad risk reward situation. You should always own your cryptos on your own keys, not your crypto. Rug pulls are part of the landscape, unfortunately, and you might get caught up in one. The key is not to put all your eggs in any one basket. You'll be okay, right? Reason number 5, you will not have enough passion for it, which is similar to stop trading, but you're in it for reasons that aren't strong enough reasons, right? You don't like it enough. You don't care about crypto enough. You don't read, Cointelegraph, CoinGecko. You don't think it's a really innovative technology. If you want to just trade, that's fine. There's nothing wrong with that, but you have to at least have a passion for trading, right? And crypto is the medium. You have to have a passion for crypto, and the trading is your medium. Whatever the reasons, you don't have good enough reasons to be in it. You're not dedicated enough, and you just won't be in it long enough. And I put that one kind of twice because I think it's that important. You need to be in it long term, for many years, decades. Crypto is young. It's a young industry. But if you're not in it for long enough to get good, long enough to get past the growing pains, long enough to see and be smart because you've been around, then you'll fail. And the drivers of this is your passion, is your interest, is you really want to make money. It can happen. You know that you're smart enough, but you have to learn. Are you learning? You have to overcome this. And I'm gonna tell you how to solve all of that. It's very simple. I can explain it to you in a very simple way. Really good strategy and unemotional execution. That solves all of this. Because when you get greedy, you don't have an exit strategy, you don't have a profit-taking strategy, right? When you can't cut a loss, you're not following a strategy that tells you to cut a loss. You don't have an exit signal, an exit trigger. A popular one in trading is the SARs, right? Parabolic SAR. When the parabolic SAR is under, the crypto price, parabolic SAR is on top, it means that the crypto price is going to go down. So that's an exit signal. It's a stop on it. Boom, get out. Or the RSI, when the RSI is very oversold, hitting resistance, that's a good time to sell. You can't follow your system, and you're too emotional. You want to be right. Your ego is engaged. That solves it. You will get caught in a rug pull. Again, strategy. If 15% is spent on something like Celsius, but 85% is your trading account, you own those keys, you're fine. Your risk management has protected you, and you can recover. Again, this is a strategy, but it's unemotional. An unemotional strategy. I think that everything is actually fairly straightforward, and the problem is not employing the strategies. There are trading simulators out there. There's one called TradeSync, but I think it's for the stock market, but it's the same principle. You can test out strategies, entry triggers, exit triggers on a sped up 5x speed up time, and you can test the strategy. You can figure out if what you're doing is working before you spend any real money, and you're not dedicated enough. If you don't do that, you're not dedicated enough. This is one of the things that I did that cost me money. I thought that if I wasn't in it for real, I didn't want to be in it, and that's fine, but it costs money. And it would have been better to, in a simulator, test out my strategies and work that way and then trade. That would have been better. It would have been more profitable than just going and doing it, because there's really that avenue to do it. So 5 reasons not to trade. You'll get greedy, you can't cut a loss, you'll stop trading, you're caught in a rug pull, and you won't stick with it long enough. Solution, strategy, risk management, dedication to the long term. You can do literally anything with that. If you have that, if you have evolving strategy, if you have evolving risk management, evolving dedication, if those things are solid, you can do it. You'll succeed, you'll win in pretty much anything you do. It's very easy to say these things to you, very easy to verbalize them. It's hard to live. It's hard to be at work and then trade. This is what I do. It's hard to have a whole life and then do that as an extra, but you can work around that. You can, this is my day to catch up on the news once a week, twice a week. I run a strategy simulator once a week, twice a week, whatever it may be, and then you'll succeed, you'll win. You just need to be in it long enough. If you stayed to the end, thank you for watching.